What is up? Welcome back, everyone. The market is closed today due to the holiday weekend, and this ticker needs no introduction. Big tech giant Tesla. I believe we have a great opportunity ahead of us if we can remain patient. And when I say believe, guys, it is purely based off the chart structure and technical analysis. Remember, this is not financial advice, and let's get to it. Before I get to the Tesla chart, guys, I'm going to do a quick market recap for this week because we're in a very critical position right now. This is the S&P 500 index, and I did some Fibonacci retracements from the past moves, and you could see also this zone had some support in the past, and we responded nicely. Sorry, guys, we responded nicely about 4.5%. That's pretty good response in the market. So now if I do a Fibonacci retracement on this last move, guys, and I'll zoom in, you could see when we respond in this zero point 0.5 to 0.382 area, that usually signals a strong continuation to the upside or downside, depending on where the retracement is coming from. This in this sense, it's the upside, and you could see we are up here, and now we are in this kind of decision zone. We got rejected twice by these EMA lines. So next week is a very critical week. I would be very cautious, not financial advice, when entering positions for next week, because just when you think the market is coming back, the market makers will slam the door and drop the hammer on us. So be very cautious. We are trading right on these EMA lines, but I think we might have a little more room to the upside before the bear market really sets in. We have this gap here. We have the 50-day moving average here, and we already retested this twice. We're in this zone. And if we go to the weekly chart, I think you could see, I've talked about this in my other market sentiment video. This is a compression line on the weekly RSI. I think there's just enough room to close this gap. And then the 14 and the 20 weekly moving averages are waiting right here as well. And then maybe we see the dip. That's not necessarily what may happen. We could see the dip now, but I think we may have a little bit more room. We'll find out on Monday. All right, let's get to Tesla. So Tesla's a great stock, guys. Obviously, I love Tesla, and it's a very unique stock because it has one of the highest market caps in the trading world, but it's way more volatile relative to its big tech companions. You could see the explosive moves that it has at this high market cap. That's rare in stocks, and you don't see that with other stocks like Apple and Microsoft. They're more slow moving. You could see it. And what does that mean? That means bigger gains in a shorter period of time, and that's what we like. That's ideal, especially for these big tech stocks. So obviously, I'm very bullish on Tesla in the long term. We're trading in this uptrend channel here, this macro channel. We're in the daily chart, by the way. But I think we need to be patient for our opportunity because in the market, patience prints. Whether you're waiting for your A plus entry or if you're holding a position, guys, and you're waiting for your target. Unless you're trading these very low cap, high volatile stocks, your target, if you're holding a position, your target sell prices aren't going to be reached in one day, 1 or 2 trading days. So in either case, you must exercise patience and discipline, guys. So just keep that in mind when trading. All right, guys, so let's get to it. So real quick, I've identified, if you've seen my other videos too, I've mentioned this, a descending triangle, guys. And the funny thing is history repeats itself in stocks. This is another descending triangle here from the past. And ideally in descending triangles, you would like to see more support touches, but I'm already confirmed this is a support or resistance because of the past price movements. You could see it was resistance here and support here. And what happened in this descending triangle in the past? This was back in 2025, last year, January. You could see we were forming lower highs. The support kept it up. Selling pressure increased, and we gapped down. Let me turn the indicators on. We gapped down, retested, and then the EMA lines took over to close all these gaps to the downside. And I think something similar is going to happen here, and I'm going to show you why. And you could see we are already in a very similar scenario. Got compressed, gap down, retest. Now we're trading under these EMA lines, and now looks like we're off to the downside. Before I continue, you know where to find me on Patreon, patreon.com/GainsKeeper Trading. And I want to thank all you guys for your current support. My premium channel is on Patreon, but I'm very grateful for all the subscribers as well. So if you like my content, please feel free to subscribe. I love trading and producing content for you guys. I want everyone to learn how to trade, and I put a lot of work into my craft to help you guys learn and be successful traders in the market because there's plenty of opportunities to take advantage of. All right, guys. So thank you again, and we keep building this community from here. All right, let's get to it. So now we go to the weekly chart, guys. I'm gonna throw the RSI up and our drawings. Close this down. Okay, so where are we now? You could see we are very oversold in weekly RSI, and that's usually very good. But there is a difference between where we are now and in the past. You could see in the past, this weekly RSI is oversold. We've been in a liquidity zone, this load zone here, right? Last time, we're at the bottom of the trend channel. RSI is oversold here, bottom of the trend channel again. So right now, we don't have that support. There's Ichimoku Cloud support, but I don't believe that alone the Ichimoku Cloud will support this like we did with the trend channel and the liquidity zone here. So that's the difference between the past, because you could see every time we had this spike to the upside, that's the difference between the past and where we are now with this weekly oversold. I don't think this Ichimoku Cloud support is enough. You could see where it support a little bit, but I don't think it's enough by itself to spike this price and go for an uptrend. Remember, guys, you can't rely on indicators by themselves. You got to put the whole chart together with your liquidity zones and your trend channels and your other indicators. So I'm going to start with this bottom load zone here from 190.18 to 222.38. And if you take a look at the volume profile, you could see every time we're on the trend channel or in this load zone, we have this big green volume. And what does that mean? That's where the institutions are buying, guys. You could see this big green volume in these load zones. And the institutions don't buy all at once. They accumulate positions. So that's why it's over the weekly. You could see how much volume is coming in over a week's period of time. And in my honest opinion, based on the technical chart analysis, I do not believe we will get here from this next run unless, it's a really, really long bearish market. But if we do, this is a great opportunity. You could see we would come down and this load zone meets this trend channel, which has very strong support. And, around August, September, and if you've seen my other videos, that's when all the patterns run out for not run out, but exhaust for the downtrend for all those other big tech and bigger company stocks. It's not a coincidence, but not financial advice. The load zone speaks for itself. If we get here, load the boat. But like I said, I don't think we will get here, but that would be a bonus if we did. I think our main zone that we're going to get to is the supply flip zone. Excuse me, guys, between 277.08 and 314.22. And when I say supply flip zone, is that it was a supply zone in the past. You could see we get rejected, rejected, rejected. But when we're trading above it, it becomes support. And that doesn't mean the zone stays exactly the same, guys, but I've adjusted it based on other supports to make this zone more precise for us. So let's see what points to coming to this zone before we see a reversal. Okay. So first of all, we are now trading under these three EMA lines. So that's pretty strong support, guys. As you know, the 50, we're in the weekly chart still, guys. The 50, weekly 50 is very strong support in chart structure. And we're trading under all three of these EMA lines currently. And we also had a double top pattern, guys. I'll delete this so you can see a little more clear. You could see this double top pattern here. And, this is just a rule of thumb, but, it's a rule of thumb for a reason. What we talk about double top patterns. The neckline support between the two tops, which is right here, this yellow line, this strong bumper, I call it, 27%. Usually the price drops. Rule of thumb, guys, this is not always exact, but rule of thumb, where did we see our 27%? It's right in this supply flip zone. So no coincidence there. That's just another indicator. If I do a Fibonacci retracement on this last clean move we had and see how this super clean uptrend from this point to this green point, our extension level of 1618 provides strong support, especially when there's chart structure behind it, right on top of our, where we gotten rejected in the past. You can see exactly on this top of this supply flip zone. So that is not a coincidence as well. And you could see we have the weekly 200 EMA line waiting right here in this zone as well. And that has provided strong support as well. And you could see I have this M50. I'm going to go to the monthly chart real quick. The monthly 50 moving average is a very strong support as well. We haven't had sustained rejection. You can see a lot of the times it's just wicks. So back to the weekly chart. My honest opinion, based on this chart right now and the market sentiment, I think these EMA lines basically walk this price down and guide it down until this zone, until the monthly 50 and the weekly 200 take over. And potentially we see a wick like we did in this monthly chart. You see this giant wick here. Maybe we see one of those to close this daily gap and then get bought back up, and that's when we start the reversal, guys, and the bear market sentiment ends. Maybe around you know July, August, September, in that range. But in my opinion, this would be the zone. Anything under it would be a bonus. But just don't buy blindly, guys. Sometimes it's best to wait to see if this gap gets closed, because then if we respond, then the purpose of that move is to close this gap and then not financial advice. Then you can enter your position here instead of entering here, hoping it responds here, and then we go all the way down here. You know what I'm saying, guys? So it can close this gap, go into the load zone, then you can really enter a solid position without a negative percentage in your portfolio. So always do your due diligence when you reach these zones, guys. But I think this is the weekly chart sale. I think, and remember, we're trading under all these EMA lines as well. I think these EMA lines walk it down into this zone, and then the other two, the monthly 50 and the weekly, take over. So what about prices to the upside? I know whoever's bullish on Tesla doesn't want to hear this, but I honestly do not think we will see a price unless we have a major rally in the market immediately. I do not think we will see a price over 391.02 until we hit this zone first and then start the reversal. I would say these gaps are definitely in play. Maybe we retest this one more time. You could see the daily Ichimoku cloud's already red. Unless we see a crazy rally, I don't think this weekly gap gets closed until then as well. I honestly think we come down here, hang out in this zone for maybe a little bit, and then the market sentiment changes, and then we start going up to the upside. And based on Fibonacci retracements, future price goals are around 563 and 666, guys, based on future, reverse Fibonacci retracements I performed. We also have this strong resistance at 462.58 to 490.71. As always, guys, I'll provide an update when the time is necessary. Next week, keep an eye on the market. We'll see what happens. It's going to be a decision zone. If you celebrate Easter, I hope you have a happy holiday, and stay sharp, guys, and have a good 3-day weekend. Till next time.